Hello, this is fairbinaryoptions.com and this is the Euro and Canadian dollar 1 hour chart. Like the name of this analysis suggests, we are looking at a pennant, and this pennant is a continuation pattern on this Euro and Canadian dollar chart. This is a 1 hour chart. The pennant is a bullish continuation pattern, and normally we are looking to buy calls for this outcome. Let me try to show you the pennant. So this is the one. Normally it is being formed out of a triangular formation, and this is a classical example for a beautiful pennant. And the thing that we should take into consideration all the time when having such one is the fact that let me try to make it beautiful here. So the fact that it has the tendency to reach the measure move, because this one counts with a measure move, so it has the tendency to reach the measure move, and this measure move is most likely to come in the same amount of time that took the pennant to form. So what we need to do actually here, or how to treat every time you are meeting a pennant, so how to treat the measure move and the target to the upside in this case, is to measure the length of the pennant. So starting from here, the time taken for the pennant to consolidate, and to here to the lowest point. So this is the time element, and we want to measure the time element. So this is the time element. Let's change the color for it a bit so that we know what it means. And we are projecting this one to the right side by the moment the pennant breaks, and this is the moment the pennant ended and the pennant broke here. So we are taking another vertical line, we'll put it by the moment the pennant break, and projecting the time on the right side, and there you go. You'll have your expiration date. What does the expiration date mean? It means that price should be higher because we are looking to buy calls out of these breaks, out of this outcome. So buying calls out of this outcome, and we are looking for price to go higher and to reach higher values at the expiration date. Now the expiration date, as you can see here, is the 4th of October at 1 o'clock. So let's say 1 GMT. So there is 1 hour after midnight today. So you might choose end of day expiration date. So because of that, let's say because of that, we are buying calls. So we are looking to buy calls with end of day expiration because of this pennant. Now it depends very much, let me change the color for it. It depends very much what kind of time frame you are looking at, and what is the pennant being formed, because you are looking most likely at the consolidation pattern here. Pennants at a consolidation time frame that is actually quite small. Pennants have the tendency to form really small contracting triangles, so really small consolidation patterns, and because of that, what we are looking is for price to go aggressively higher. Now the measure move, if you were to treat this chart on the regular market, the measure move for the pennant is to go from the previous length, so the move prior to the triangular formation, to measure this one here. Let's change the color for it, actually not the vertical line but this one. Like this, and then clone it and put it by the time the pennant is broken, and this is the very definition of the pennant. So the measured move should come, this is the measured move, so actually 1:41:57 should come in less time than the time taken for the whole pennant to form. So basically we are looking for something like 70 pips to the upside more, and this 70 pips should come in this expiration date, so basically until 1 GMT today. That being the case, we are looking to buy calls based on this outcome. We have three clues that price will just go to the upside: the pennant, the measured move, and the fact that the pennant just broke to the upside out of this triangular formation. And now we are just looking for price to relentlessly move higher until the measured move is done. And we have the time element. This is the beauty of incorporating the time element whenever you are having to do with a pennant. Whenever you are buying calls, you're looking for price at expiration date to be bigger than the striking price, and whenever you are buying puts, you are looking at price at expiration date to be lower than the striking price. We are buying calls here, so looking for higher prices, and this is why we are having this strategy and the expiration date. Thank you very much for being here. This is fairbinaryoptions.com, and our official sponsor Lionhive makes all these recommendations possible. Until next time, stay safe on the markets. Bye bye.